Good morning, traders and investors. My name is Shen Mongangi, one of the best market analysts here at HFM. So to begin today, yesterday, two things happened. There was a positive news and negative news that affected the US dollar. So the first positive news was there was a deal between US and China that brought the truce back. So how does this affect us? So we understand that when there was a trade war between US and China, it brought fear and uncertainty, and traders and investors will have moved. They moved to safe haven demands currencies like CHF and JPY, and also safe haven assets like gold, So with now this happening, fear and uncertainty is reducing, and traders and investors are moving now to risk on mode, and they're turning now back to currencies. And as the US dollar economy is likely to strengthen because of this truth, we might have also the gold moving down, because traders and investors will be shifting from safe haven demands to move to assets that bring them more returns back. Now, coming also to the economic calendar. Yesterday we saw CPI coming out soft, and it came out as a negative 0.435. And that move, if you were in our Instagram live yesterday, people were able to catch Nasdaq longs, and they were also able to catch gold longs. And so that big spike in gold, big spike in stocks, but a decline in the dollar. Why? Because before we jumped into the trade yesterday, in yesterday's morning market call, we talked about what this CPI means, and it's an inflation indicator. So if you have higher CPI, this can lead to interest rates being hiked, therefore strengthen the US dollar. But yesterday we got inflation coming out worse than expected. So there's a likelihood where a shift may turn to a cut, but we're seeing inflation reducing in small numbers, not gradual numbers. Therefore, the cut may take a long while, but the perspective now is a cut may take place because of a reduction in inflation. And when inflation is low, they tend to take it up by cutting interest rates. So moving on to the charts, let us see what actually happened yesterday. We can see on the daily candle, we've been marking these levels, and all of our levels, we can see how accurately they played. So yesterday we talked about the dollar index being in a range in our morning call, and we talked about when we get negative news, we'll be looking for a breakout on the bottom. When we get positive news, a breakout on the top. And you can see we had been ranging. Then when CPI came out at a negative, we targeted the bottom support zone, and we hit that, moving aggressively down. And today we opened with a gap, showing that the move is still aggressive. When we move on to our lower time frame, we can clearly see what happened. So you can see that sharp aggressive move, also us opening today with a really big gap, showing that the inflation numbers influenced sellers to sell aggressively. And you can see, after how we always do our trades, once we break support turns to become resistance, and you saw it come and tested back our resistance, and we moved back down. So simply, that was a good trade for those who were able to take it yesterday. Coming on to our gold. So gold did something interesting. So during NFP, we saw gold spike up. Then spiking up, we got some form of absorption at this candle limit orders which are here. And we came all the way back here down to test the lows, then we went back up. So this high shows, again, gold and dollar are inversely correlated. If gold is going to move up, dollar is going to move down. And yesterday, dollar moved down, gold moved up, and you saw that move. So during NFP, we were around here, and when we broke that key support level, a key resistance level, not on support, we were able to move We came back for a retest, and the retest failed, and we moved all the way down. Then came back to our previous support zone, then we moved up again. So remember, trades like this use strict risk management. Trading is about getting the right opportunities and capitalizing the opportunities that you see in the market. Moving on to US 500, you can see that sharp spike move that we got on the upside when the news came in, and we were able to move up. And coming on to our daily chart, you can see we are able to come and test our resistance zone that we had marked also, and you can see it was at 60.36, and I had mentioned this is a psychological level. So we came all the way up, broke that level, and now we're coming back down. We failed to break with clear momentum, and you can see you're coming back down, and 59.79.04 will be a good level to see it as support if nothing changes. Also, the same happened on the US 100. You can see clearly on the daily chart our zone, our resistance zone, where we had touched more than 1, 2, 3 times. We came back again, now it being the 4th time touching that zone. And we came all the way during the NFP level, during the CPI, and this show, we reacted on, we had some good reaction, and at the resistance zone, so at this resistance zone, it shows us that sellers were still there and they were able to take this market down. Key zones I've been looking at still, the tech industry really seems to be strong, so I'll be looking at this resistance zone at the 22218.39, expecting to see some move up, but remember, first of all a pullback, then a continuation. So also 2156.7.32 looks like a good level to be waiting for your pullback. On Euro USD, we saw that move up yesterday because the dollar was moving down, and here we have USD as the quote currency. So if USD is weakening here, the euro will strengthen, and you can see at the moment it's as if we're targeting all-time highs again. And we opened yesterday, we were able to move up, leaving clear imbalances and also closing on top, showing us that buyers are strong in that move. The same with JPP USD. AVP USD, we had that clear move up, but we came back to that resistance zone again, marked at the 1.35690, and again we're having that form of range, but we're able to get that sharp move up. Today we're printing upwards, but got again that rejection from that resistance zone, showing that sellers are resisting buyers from moving in that zone. On the USD JPY, of course, here you have USD as the quote, as the base currency, and we are moving downwards on the USD JPY, having reacted from our resistance level at the 145, the 215. If you always look at our daily morning market call, which I will advise you to always review them each and every day, you'll always see that each and every level that we mark will always have a reaction in that zone, because it's simply purely on supply and demand theories, and support and resistance supports us in that supply and demand, where buyers aggressively sold, or where buyers aggressively bought, or sellers aggressively sold. And we'll always, most of the time, we'll find reactions from that zone. And you can see yesterday when we had that slight buy, we had that reaction on that zone, then the aggressive sell came in, and now we are past a resistance zone at the 142, a support zone out and resistance at the 144.120. On the Audi USD, I talked about it yesterday and said that we never got that form of strong buys up this resistance zone. Why am I looking for strong buys? Because I see we have been ranging for more than a month. If you're ranging for more than a month, then these zones have been holding. If you're going to break any of these zones on the top or the bottom, I have to see buyers taking charge or sellers taking charge. I have to see high momentum candles and volume confirming it, so that it can show me that yes, now buyers have a buy, buyers have a bias or sellers have a sell bias, and bias by BIAS, bias like perspective. And I have to see that so that I can have a confidence that this move is going to hold. And at the moment, I'm not seeing any of that. Therefore, I'm still cautious on entering Audi USD. So with that said, I like to end there. We are majorly touching on gold and USD assets and also US stock assets because that's what was affected by CPI. Somebody yesterday during the live asked about the US oil and US oil, and he asked about why do we not get that reaction on the US oil, because you are somewhere here. So why do we not get that sharp reaction from the US oil? US oil is not affected by CPI. US oil is affected by geopolitical risks. Yeah, it's affected by geopolitical risks and also supply and demand dynamics. So yesterday when that came out, those who are looking at oil never got that move that they were expecting, because again, US oil is not affected by CPI. Yes. So again, with that said, I'd like to end my daily morning market call there, and tomorrow, same day, same place, not same day, but same time, same place, we'll meet here and we'll be able to talk more on what is happening on the charts. Right now, USD might strengthen. Why? Because we have that truce that was bringing fear and uncertainty, and yes, so be cautious on when you're trading USD pairs, because the sentiment may switch anytime from bearish to bullish because of that truce that we have. So that said, goodbye. Remember, this is a pre-recorded YouTube video. You can go to our YouTube page. Make sure that you like, subscribe, and share to your friends who are traders, and also comment. If you comment, we're able to look at those comments and also answer questions that are asked in the comment section, and also we are able to improve our daily morning market call based on how we receive feedback from you. So with that said, goodbye and see you tomorrow.